Hello, Baker investment students. I hope everyone is doing well and getting ready here to hopefully get some cooler weather here in Kansas City this fall. So, what I want to do today, and I'll post these every Sunday or close to Sunday, is just kind of give you an overview of the course and the week to come. This video mini lecture will be a little bit longer, just kind of give you a background of the syllabus and hopefully answer some of your questions. But again, looking forward to working with you this fall. So, good to see many of you again. First, just a quick rundown of the syllabus. The best way to get a hold of me always is via email. I'll check it that day and get back to you, or the following day at this latest. But looking at some of the main objectives of our course, with the homework, I put templates out there. So really what I'm just expecting you to do is just use the template, and you'll complete your work in the template. I've given you some guidance in some of those, so definitely read through the textbook, look at the questions. But what I'm wanting you to get out of the homework is the use of the formulas in Excel to help you solve many of the problems. And then with the weekly portfolio project, the forum discussion, this week I want you to pick which stocks, 5 to 10 stocks, you're going to track throughout our course. I was thinking this morning, just like maybe like picking 5 utility stocks and tracking it if I were to do this. And just make sure that you use a closing price date, put what that price is. Given the amount of money that you have to invest, you can divide it up how you want to. If you have any dividends during that time period, I would just put it in a cash account. If you want to reinvest it in more shares of that stock, you would just purchase it at that current stock price. But the main objective for this week is just to go out and put your portfolio out there and explain why you pick those particular stocks that you're going to keep consistent. You're not going to do any trading during the time period, but just that you're going to track during the next 6 weeks. You do have an investment manager style project in this course, so I would pick somebody that you're going to be able to get some information on, somebody at a higher level figure. Hopefully good, but it could be someone that's did some bad things too. But look at the prompts of that question and make sure to address them. I put a sample APA paper out there that I've done in the past when I was in a finance course at University of Kansas back in 2020. And then you'll have the common assessment, which looks at a world event. So this is something you do have to upload to TaskStream. You've probably done this in previous courses, but definitely follow the prompts for that. And then the last thing is with the quizzes and the final exams. So we'll have those coming up throughout the course. There'll be multiple choice questions. In fact, on the final, what I've done is I've taken some aspects of the first 2 quizzes and put them in the final. So just make sure to especially look at those quantitative problems in the first 2 quizzes. Take note of them because you'll see them again in the final for at least I think the first 10 questions. So other than that, I just want to go over a few things, the highlights of chapters 1 and 2 this week. And then one thing that's been on my mind recently too, I saw Janet Yellen, our former Federal Reserve Chairman, who's now the Treasury Secretary, which I took note of, that kind of warning that if politicians don't raise the debt limit, it could have a lot of complications to financial markets, and that is a concern. And the debt level says this is the amount that the Treasury can borrow to help pay for all the government expenses. So obviously we have to issue Treasury bills, notes, and bonds in order to pay for all those expenses. And what she was saying is that the United States has always been known as the world's best rated nation in paying off their debt. But if we lose that credibility, which happened before previously, where Moody's had to downgrade some of the concerns about whether politicians could work things out. So hopefully it doesn't get to that point. That we would just flat out say no, we're not raising the debt limit, because it would really impact investments. But even the very threat of just bickering about it can even cause investments to spiral downwards because there's less confidence in the United States to settle their problems. So hopefully that does not happen. I want to go over some of the highlights of Chapter 1. First, the investment policy statement, that one really stuck out to me. No matter whether you actually are dealing directly with the investments in your company or whether you're a nonprofit for like a church, most of us will deal with this for individual basis, your own philosophy about investing. and the risk and reward. But it's so important to have a policy statement, especially for a corporation or a nonprofit, because I've seen so many times in the past where between a board and an individual making decisions that were not in the best interest of the organization. That is typically taking on more risk. So when I was a treasurer for the College Reading Learning Association, I have helped draft a very specific set of guidelines of what were the allowable investments, and basically it was anything that was pretty much CDs, and that's what we had kind of agreed upon, because we did not want to expose ourselves to the risk, and we would not want to have an organization that was investing in stocks or any other types of securities. So, but we've seen in the past where cities have gone out, like Los Angeles, I think in the early 90s, invested in derivatives, and Orange County, California, basically went almost broke, because one individual. So it's very important to not only have that investment statement, to make sure you're auditing the people that are doing the investment too, because if you're not, it can run into a lot of issues. So with that, also comes the idea of goals. What are your investment goals? A recent example I'll use. My son went up to college at the University of Wisconsin-Oshkosh. He's going to be a freshman there in Russell. But when he was born, I started a 529 plan. And when I started, it was an age-based aggressive plan, which I was fine with because it would adjust as he got older. The monies that would be invested would go to more conservative types of investments. And when he finally turned 19 this summer, he started college, I just made the decision just to put it all in very low risk investments. May I have lost out on returns potentially, but I didn't want to take any risk. I've spent so much time and effort building up this portfolio for him to help him pay for college. You wouldn't want one event like September, back when we had in the subprime crisis, wipe out half that portfolio. So it was a decision on my part, but it's part of an investment philosophy. Again, you have to think about individual things like taxes too, strategy. So those are all important. You'll read a lot about that in Chapter 1. And then in Chapter 2, some of this should be review, but you're going to go through the different types of markets, the IPO process, the idea of a syndicate. I remember when I was at Sprint PCS, I got to be part of that experience back in the late 90s when we issued Sprint PCS stock that eventually became merged with Sprint. But we went on a roadshow and tried to drum up business for that, investors, I guess, essentially for our business. But one of the main things they said in this chapter that really struck me is the idea of globalization, how much that has changed our investing philosophies and our choices that we have. It's often argued that you should have some of your portfolio diversified in international investments to diversify some of that risk. But another striking feature that I think of this chapter was also the idea that, I remember when I first was a undergraduate student in the early 90s, long time ago, and thinking about getting into the financial markets, and I worked with a stockbroker back in Pennsylvania. But at that time, the technology was not available and everything was controlled through a broker. But we all as individuals today have access to so much information, the ability to trade our own. I mean, I have a Fidelity IRA account that I can go in and do all these trades that are mentioned in the textbook. You have to do that with caution, but it's open. You don't have to go through a broker anymore, and it's a much lower cost, and you have available information too. You just have to make those decisions. So, but with that, also there's the regulation of markets. There's a lot of events that have happened over time. We have put things in place, especially after the subprime crisis. There's still concerns. Are we going back away from that? Are individuals or corporations, putting themselves in greater risk again? So it's that balance between how much is good regulation in the market and how much actually incurs additional costs. So with that, just kind of wrap up, just mention you'll read a little bit about margin trading and hold period returns in that chapter. But if you have any questions, do reach out to me via email. That's the best way to try to get a hold of me. But I'm looking forward to working with you again. I'll jump into those forum discussions. I'm interested to see what you choose this week. But again, have a great week, and we'll see how the markets turn out over the next 6-7 weeks. Take care.